Good afternoon. Welcome to another Wednesday webinar. It is Wednesday, April 3rd, and markets are doing pretty good. My name is Stock Darts. As usual, we're going to go ahead and cover the four major markets. We're going to look at the S&P 500, the NASDAQ Composite, the Russell 2000, and the Dow Jones. Once we finish with that, we will take a quick look at the US dollar, see how it's doing, see how it's affecting gold, silver, and oil, and then we'll move on to the chart requests. For those of you that are here early, welcome. You can always follow me at Stock Darts on Twitter, on YouTube, or patreon.com/StockDarts if you're looking for more trading ideas from me and just more content in general. As those of you that are here are aware or not aware, Frank has been in poor health lately, so you're not going to find him anywhere near StockGuy22 on Twitter or YouTube, but hopefully he'll be getting better soon, and maybe we can hopefully hear from him in the near future. Other than that, let's go ahead and get started. Let's take a look at the S&P 500, and we're going to look at the ETF SPY. Last week we mentioned that there were two general possibilities at play, and the idea was that we were dealing with a pretty major level of resistance around 280, and we had formed a nice sort of descending pennant, descending bull flag. And if we were to break out above it, as I mentioned last week, I thought there was a good chance that the market was going to try to make a run for all-time highs, and that appears to be what's happening right now. The other scenario was if we continue to pull further back and maybe test it down to around our 200-period moving average, a little below, which would have set up a really nice buy the dip opportunity. But instead what ended up happening was we had a breakout. Now, that was still a nice tradable opportunity because we had a nice consolidation range, we had a breakout, and we even had it pause the day of the breakout and sort of wait for anybody to get in behind. And then it gapped up the next day and is kind of run up the next 2 or 3 days. Now, the upward momentum or upward pressure on the markets has not been that great. As you can see, we've been printing a lot of little dojis as we've kind of made our way higher. But overall, the market has definitely moved upwards. Even if during the day there isn't a lot of movement, overall there has been a decent amount of movement throughout this week and last Friday. Now, where we go from here is kind of interesting because, as I mentioned last week, I thought that 280 was a pretty important level, and if we were able to get past it clearly and decisively, which looks like we finally did, there's really no other wall to stop us other than all-time highs. And so that looks like that's the ultimate goal now for the S&P 500 and for the markets in general, is to test higher and to come up and try to test these all-time highs. And will that happen immediately? Maybe, maybe not. As you can see, we're kind of just inching our way upwards, and there's a decent chance that we will have to pull back and retest this 280 level again. But now we're going to be retesting from the right side, right? We're going to be above it, which means next time we come down, that level should act as stronger support. You've got the 20-period moving average and the 50-period moving average moving up very, very quickly and very steeply to come up and meet price, and they should sort of cushion the blow once we do pull back and act as a supporting area for buyers to step in and buy any dip once we do start to consolidate. I think overall we are seeing a little bit of a slowdown in how quickly we're ascending through these levels, but we're not stopping, right? And what I mean by that is if you take a look, we're going to use this trend line. You'll notice when we started the year, we started off at a very, very steep ascent, right? And then we had a small consolidation around this 263 area, which was a very important area because, again, this channel between 280 or 281 and about 263 is a really important price area because that was where we tried to hold up last year before we really caved in and really just kind of just cratered to close out last year, right? So that was a pretty important area, and you can see we just shot straight out of a cannon once the year started and came up and retested that area. We spent maybe 6 days testing it, and then we were able to break through it, right? And we came right back into this area. Now, you'll notice when we did that, for the most part, we didn't really lose too much steam. I mean, we slowed down a little bit. You could tell the angle of this trend line changed a little bit, right? It went from being a super steep angle to a pretty steep angle, but a little bit more normal, right? And then what's happened now as we've approached the top of that area is that our trajectory, the slant of our trajectory, has changed, right? And it's gotten a little bit more flat. Now, that's really just, sometimes you look at that as a sign of momentum dying down, or a sort of a scent, or a hint or a signal of a reversal process. But I don't know if that's what's happening here. I think this is just a normal run-of-the-mill pattern of price action slowing down because it hasn't been able to really consolidate for a long amount of time. But overall, while we're still seeing a little bit of a slowdown in how quickly we're climbing, we continue to climb. And until we see a change in that pattern, we have to assume that we're going to continue climbing even higher. And so where we stand right now is again, we are above that 280, 281 area, which is really important. And I think the next step is probably a retest of either the 281 area or this new sort of ascending trend line, which is at this point really not 100% relevant, but might be something that supports price action as we move forward. And it looks like it's going to coincide with the moving averages. So we can do something like this now and see how long we maintain this sort of trajectory. I think it's going to be more like this. And see if we continue to climb along these lines all the way up to those all-time highs around 292 to 293. And again, overall, the market's just continuing to act strongly and really just brushing aside any concerns that anybody might have about our overall economy or over the overall sort of state of the markets in general. As I mentioned last week, we should be looking to trade bullishly. This is not a time to be shorting the market. I don't think that even when I expected a pullback, I didn't look to as a point where I wanted to short it. It was more along the lines of all I wanted to do was just wait to buy dips or wait to buy nice breakouts out of consolidation patterns. And we've gotten that, and we've gotten a nice 4-day move off of that. And hopefully you guys had some names that followed and mimicked this behavior and went higher with it. Last week I mentioned that I thought tech and oil names were two names that two areas that would be behaving well, and they both have done okay. The oil names maybe haven't gone as strongly as I expected, and tech has definitely followed suit and moved higher. But there are definitely areas that are following this and behaving in very similar fashion. Now, what can we expect from here next Wednesday, right? Because, I mean, at this point, it's pretty clear that the market's moved higher. And now we want to know, how do we behave? How do we react to this? How is it going to behave from here to next week or the week after that, right? So, judging by the pattern that we're seeing now in the short term, and again, I'll put up a few little rectangles to really explain this again. So, we started off here in basically a straight climb, right? And then once we hit this key area around 263, we slowed down a little bit, but not a lot, right? You can see we moved a little bit less direction, a little bit slower, and a little bit less ground cleared than maybe what we cleared from 233 all the way to 258, right? And then now we've entered another phase that really kind of started after this first pullback into 272, but we could say maybe something like this right now, right? And you'll notice, actually, well, I'm going to continue. I'm going to kind of add this because this is kind of important. You'll notice now we're getting stronger pullbacks, right? But we're consistently bouncing off of them. So I expect the next move to be very similar to the last two times where we had a move up and then we had a decent correction and then we continue to move higher, right? So I suspect that we will consolidate in the very near future, probably tomorrow and the day after, maybe even into Monday next week. Whether that's a straight sideways consolidation or whether that's a move right back to this ascending channel or ascending trend line is still up for debate. But I suspect that we will consolidate and then from there probably try to make another push towards all-time highs. At this point, we can start to watch to see how momentum plays out on the S&P 500 and whether it will continue to maintain this trajectory or whether it's going to continue to erode and slow down and start to taper off even further, right? So it might be that we start to get something like this and then eventually like this, or, well, obviously we can just continue to go up to highs, right? Or if we lose this trend line and we lose these two moving averages, then we just get something like this and we come back and start retesting. Now, does that mean that we topped out if we kind of come down to these areas here? Not necessarily. Because again, we haven't had a real substantial correction in quite a while, right? So if we do lose this short-term trajectory, if we start to lose this 280 area, I don't think it's the end of the world. I think it just means we need more time to test our 200-period moving average to maybe test the meat of this channel. And then eventually we'll see whether there's enough buying pressure to kind of come back and lead us back to highs, or whether we start to slow down and maybe come back and retest lows. But I don't think it would be the end of the world if we did pull back here. But that's not really what it looks like right now. It looks like it wants to continue pushing upwards and continue to test towards the highs. So what we want to see now, again, is will it continue to maintain this trajectory? And as long as it does, then I think all-time highs are pretty much a sure bet and likely to happen very quickly. If we do lose that trajectory, then we'll have to see whether we maintain this 280 area of support. And if so, then it's just a matter of time before we buy that dip and make our way back up and start testing again. But as you can see, the closer and closer we get to these areas, the more they become a magnet that needs to be tested. Because again, it's a major price level that a lot of people have their eyes on, right? Whether it's people waiting to short at that level or whether it's longs waiting to take profit, they're all looking at that area as the spot where they wanted to go ahead and either do whatever their next action is, whether it's to buy or sell. And the closer and closer we get to it, the more and more eyes are going to be set on that level waiting for it. Now, what often happens is the first attempt kind of coming up here, especially the manner that we're doing it, usually what happens is people get antsy and take their profits just before there. So we might have to consolidate right before that level and then make another push up to it, but we'll see what ends up happening. But for now, I think if you miss this buying opportunity, I think at this point you need to wait. We've already moved up 4 days in a row from really good areas of support and good risk reward. And I think at this point we need to wait for the next buy the dip opportunity or the next breakout off of a consolidation pattern, which would happen. Again, it doesn't necessarily mean we have to pull back like this. It could be that we just do a tight little bull flag like this, right? And then from there you play the momentum upwards. Not much left, right? So risk reward is getting to be a little bit trickier to really decide how much further we want to go ahead and play to the bullish side because we're running out of room as far as our targets are concerned, right? So I think at this point, despite the fact that we are looking pretty strong, it's starting to get to a point where we want it to be a little bit more cautious about how much we want to go ahead and add to the long side because there's not a lot of room left unless you are of the expectation that we are going to blast through this level and have a new leg up in our bull market, our 10-year bull market. So I think at this point, this year has been a little tricky for traders, despite the fact that it's been straight up, because there hasn't been a lot of consolidation ranges for traders to go ahead and get fully loaded long. At least for myself, and I think for anyone that I know that I've talked to, it hasn't been a difficult market because again, when a market goes straight up like this, a lot of mistakes are erased as long as you're trading on the right direction, right? As long as you're not trying to short this and trying to call a top over and over and over, this is not a market that's that hard to trade from a swing trader's perspective. Because again, as long as you're playing to the long side, the market's going to take care of a lot of your trades for you. But that being said, it hasn't been that easy as far as managing a portfolio or trying to go ahead and add a lot of names because the market hasn't really given us a lot of opportunities to get fully loaded, right? Because it started off with a huge rally when most people expected it not to rally, right? So right there, a lot of people missed the bottom, myself included. And then we had this nice consolidation range and we were able to take a play to the long side off of that, right? But that's not enough for you to go ahead and say, I want to add a bunch of names. I think that I think that the drop and the rollover from last year is over, right? I don't know that that's a significant enough pattern here for people to think, well, we're done bottoming out and we're ready to move back to all-time highs, right? This was a point that was really up for debate, and it was kind of a coin flip as to whether we're going to roll right back over and test new lows or try to push higher, right? So this is a spot to get cautiously optimistic, but not to go full-fledged buy as much as you can, right? So what happens? We continue to run right up to the next area, and now we've reached a point where the market's pretty overbought and into pretty strong resistance, right? So even though I was bullish at the time and had plays that worked out for me, I didn't go over crazy overloading to the long side because, again, there was plenty of potential for us to roll over and to stall out and to take longer testing a pretty critical area, right? And that ended up not happening. We ended up kind of chugging right through there. But what's ended up happening is that if you are trading sporadically and you're kind of picking and choosing names to trade, then you're doing pretty well in this market. But if you're trying to add a lot of names to a portfolio after maybe stopping out or losing a lot during the last quarter of 2018, then you've had a hard time because there hasn't been any real area or situation that dictated getting aggressively long with a lot of names, right? So now all of a sudden we've reached the point where we're reaching the top of our range of last year and reaching all-time highs, and we still haven't really had a chance to get fully loaded to the long side, and we're still kind of just picking and choosing and following along with the momentum. And so while it's been easy from that perspective of being able to just take names to the long side, it hasn't been that easy from the perspective of someone that maybe wanted to get more aggressively long on a market that certainly has changed its character from what we saw last year. And now we've reached the point where we are right back at the highs, or close enough to it, where risk-reward is not really that great to go ahead and get aggressively long. So what we need to do, again, is just be patient and take what the market gives us. I think that this year is still going to be characterized more by range-bound trading than by some massive rally that blasts to new highs. And with that being said, that would mean that for the most part, I think that we're getting to a point where we need to be more careful about how many longs we play and what our targets are, and not to get overly optimistic about our chances of breaking to new highs. If we do break to new all-time highs, then we'll likely get a scenario very similar to what we just got, which is you get a breakout and then a retest, and then you could play the momentum from that perspective. But what ends up happening a lot of times is the traders that doubted this all this time, they eventually get convinced at highs, and then that's when they decide to get long, and those are the guys that make the mistakes. Because that's typically the worst time to get long, is when you've had this huge unimpeded move back up to highs, and then someone says, well, we're ready to break out, I'm going to buy now, and then that's when all of a sudden all the selling comes in and we get all the consolidation and all the back and forth as we deal with the real and true resistance levels, right? So I know a bit of a long-winded description of what's happened in the S&P 500 today, but I just wanted to point out that while I think I'm still pretty bullish and I think that we are going to test all-time highs at this point, I'm not that excited about trading right now because I think the risk-reward is getting to a point that's a little bit more difficult to accept. So what I'm waiting for is, again, a pullback or a consolidation range, and then I'll go ahead and take the place to the long side once momentum resolves again to the upside, and play them, but I'll be pretty quick with my targets while I wait for a meatier base or consolidation range that would give us a little bit more of a chance to get better risk-reward or better value plays. Now, if we take a look at the NASDAQ, you'll see the same thing, maybe a little bit stronger, right up to all-time highs as well. Look how close we are. 180. We're trading at 184.50, and all-time highs are what, like 187.50, so about 3 points away. Basically a stone's throw. Now, can we get there today or tomorrow? Certainly. Would I want to play long from here? Probably not. We're up 4 days in a row. We've had a few successive gaps, and probably we need to maybe have another consolidation range and then make a move for those highs. But if any index is going to go straight to highs, it's going to be the NASDAQ right now. I think tech has been the strongest over the last month or so, and it continues to act, I think, the strongest. And I think if there's one that's going to reach there, it's going to be the Qs, and it's going to be some of these tech names that lead it higher. Now, as far as levels are concerned, I mean, it's pretty obvious, right? We've got a new floor around 177 to 178. We've got a ceiling up here, 187, 188. Now, If we get there, who knows what's going to happen, whether we try to push higher and make a new leg, push to new all-time highs, or whether we finally hit that ceiling that so far we have not found in 2019. Pretty much every attempt that we've had to push through previous levels of resistance has gone without a hitch in 2019, right? You'll notice again. So if we start at the very beginning, we were able to get sort of break through this channel right away. The first few days of January, we made our way straight up to the top of that channel. Didn't pause. We just broke right through it, consolidated above it, came up to the 200 and just kind of climbed right through it. Came up to the 178 area, which again was a pretty critical area based off of where we started to lose momentum last year. Broke right through it, came up, retested, and kind of came right up, right? So if we were to continue following the pattern that we're seeing in 2019, well then we're just going to come up to the all-time highs, spend a day or two, and then break right through it. Now, I think that that's going to be the level where maybe we finally get some real selling and stall out a bit. But up to now, we've just kind of chugged right through every level without even really pausing, particularly on the Qs. So, again, chances are we're hitting all-time highs in the next few days or maybe even the next week. And then from there, we'll see if we finally find the sellers. I constantly use this description or this descriptor when I'm talking about the markets is it's looking for sellers or it's looking for buyers, right? And it's kind of like the opposite, right? A good market is looking for sellers and a bad market is looking for buyers. And right now this market is looking for sellers and it really hasn't found any. Up to now, it just continues to probe higher, and it will eventually find out where the sellers are and where people do not want to hold any further. Whether that's all-time highs or beyond is anybody's guess, but that's the next test. Now, if we do pull back prior to the all-time highs, chances are it's going to be a bull flag. Chances are it's not going to come all the way down to 178. And if that plays out, then likely scenarios that it resolves to the upside and then comes up and tests highs and probably pushes past it. If we do pull back even further, well, I expect 177 and 178 to be a pretty key area of support now, and to likely act as a good area to go ahead and buy another dip and take another shot at all-time highs. And again, there should be good risk reward with a pretty clear stop out if we do fall back below that area. If we do fall below it, well, then there's a 200 period and this area around 172 just below. But I don't expect that to be a situation that we're going to see from here to next Wednesday or maybe even the Wednesday after that. I think for now, we need to be focused on what happens up in this little area here between 178 and about 188. And again, I think that this is the area where we will find the most potential for a move to new highs is the Qs and the tech area. I don't think there's really much else to say about this. A lot of what I mentioned about the S&P 500 is going to be relevant for the NASDAQ, with the one caveat that, again, I think if we do pull back, it will be in other areas of the market. I think the NASDAQ will be the healthiest and the least likely to lose its shorter-term areas of resistance or support, and likely to maintain its moving averages, which again, as you can see, are starting to move steadily up in that 45-degree plane and parallel to each other, and this is typically indicative of a pretty strong trend. And until we start to breach those moving averages, we shouldn't expect a breach of any of these support areas that we are now above. Now, next up is the Dow Jones. The Dow Jones has been a little bit weaker, but overall has done the same thing, which is break past previous highs. It barely broke past it, but we just did inch past our highs from late February, and are setting up again for a move back to all-time highs. Now, we've got a little bit further to go on the Dow than the other two, but overall still pretty positive. You can see the moving averages are curling up and moving as well. We're above the 20, the 50, the 200. All of them are in the proper alignment with the 20 above the 50 above the 200. All of them are sort of inching upwards. And overall, this looks pretty bullish as well. And I think the only issue, again, is risk reward. I think that's the only problem we have with the market right now is the fact that we don't have a lot of value here. But if you're going to trade momentum, I think that it's clear that we want to trade momentum to the upside. I would not try to short this just because we're high, just because the risk reward's not great. Doesn't mean that you want to short this. You either sit on your hands and wait for a better opportunity, or you play the momentum. I think those are really the only two choices you have as a swing trader right now. As a day trader, it's totally different. You definitely have chances of shorting here. If you were, I think that the Russell and the Dow Jones I still think are probably the easier spots to short. But overall, I think it's from the perspective of these Wednesday webinars is from a swing trader's perspective and seeing what to do as a swing trader. And I think right now, we just have to wait to see how this plays out. You can see we've already kind of consolidated for 2 days on the Dow Jones, so definitely lagging. While the S&P 500 and the Nasdaq continue to gap upwards, the Dow Jones is already trading sideways. So again, showing some of the weakness. And the question now will become, if we do pull back, what is the Dow Jones going to hold, and how far is it willing to pull back before it bounces? Or is it going to just trade sideways while the others continue to kind of climb higher? We have a pretty clear channel right now. And if we get a substantial correction, then I expect us to come back to the bottom of this channel. And unlike the NASDAQ, I think if we do see some selling in the markets, then this is probably going to come back and test the 20 and the 50 and possibly the 200. So this would be the area where we're looking for a full test of support rather than the Qs, which I think will get a much more limited test of support because of the underlying strength in it. Now, if we do come down all the way to the 254, 252 area, that's still pretty bullish, right? Because we still are on the right side of a break of this trend line, right? Which I'll color, for now, I'll color that red, just to give you an idea of what I'm looking at, right? So we had this descending trend line. We broke past it. And again, just like the NASDAQ and like the S&P 500, without really pausing for more than a day or two. And we've spent the last 2 months trading above that area, right, and consolidating and just basically confirming that breakout. This is all textbook technical analysis. Is all very bullish. This is all showing that the market is ready to move higher, and that's what it's doing now, right? So we're at a point now where what we want to do is see what happens at this 262 level. Are we ready to push past it? Which technically we are, although you don't really want to see hammer candles at these levels. But we're above it and trying to push higher, and seeing if we can make it to all-time highs on the Dow Jones, along with what we're seeing on the S&P 500 and the Nasdaq Composite. So overall, again, nothing really I could point out negative other than the risk reward's not great here. As far as the levels, I kind of already pointed them out, but we have our ceiling now is 268. As long as we can hold above 262. If we can't, then we'll probably come back and test the 20 and the 50. And that'll probably support price, and we'll make another attempt at 262. If for whatever reason it doesn't support price, then I think we have a very substantial floor around 252 to 253, and I would not anticipate us losing that level anytime soon. I think that the strength that we're seeing in the markets, I wouldn't expect a total rollover at this point. We'd have to see some bigger news events come out, or maybe once we head deeper into the next earnings season, maybe then we can get a little bit of a move through that level. But for now, trading just off of technicals with no major news events, I don't expect us to really push past that. Now, the last index is IWM, or it's the Russell 2000, and IWM is the ETF that mimics it. And clearly a different picture here, right? Nowhere near all-time highs. Nowhere near even our previous highs from February. So overall, this is by far, the laggard and by far the weakest section of the market. Now, as I mentioned last week, it's a little off-putting when you have a market ramping up to all-time highs and you have the most sort of aggressive or risky sector lagging far behind, which shows that traders are still a little bit scared of this market, right? Because when there is absolutely no fear in the market, traders are not looking at risk, they're only looking at reward. And they are looking at the most volatile assets or the riskiest assets because they could provide the most gains. That's not really the case here, right? You look at IWM, you look at small caps, which traditionally are where you want to be when you're looking for aggressive moves, and we're not even above the 200. So there's still a little bit missing here. Now, I went over the psychology of this last week. I'm not going to go over it again, but for the most part, traders have had one foot out the door for the last 10 years, really, throughout this entire bull market, and that has been reflected with IWM's sort of sluggish behavior. So I'm not really surprised by it. I'm not overly concerned about it. But I would like to see IWM higher if we were really to have enough momentum to push through all-time highs. So this is maybe our first signal that when we do get to all-time highs, that maybe if we finally get that wall of resistance or we finally find those sellers, because again, I don't know that there's enough. I don't think IWM is showing us the requisite aggressiveness we need out of traders to really push through all-time highs. Now, as I mentioned before with the Dow Jones, if you're looking for us to pull back, then you're going to see it here first, even definitely before even the Dow Jones, right? Now, it has been bullish, what we're seeing here, right? Because again, the same basic price behavior as the Dow Jones. We have this trend line, right? That's been holding price action, and we broke right through it, and we spent the last 2 months consolidating and confirming that breakout as a new support zone. Now, of course, the IWM had to do it a little bit weaker, and we had to sort of fall below that level a few times, but we respected the descending trend line for the most part and has started to make our way back up. And at this point, are right back up and testing the 200-period moving average. So overall, despite the fact that it's much weaker than what we're seeing out of the S&P 500, the NASDAQ, and the Dow Jones, overall it's still sort of bullish behavior because we're still breaking through previous levels of resistance and still trying to climb higher. That being said, the fact that we have not been able to really push past our recent pivot points and are sort of continue to hold down is not really that positive. Now, descending channels like this are not necessarily always bearish. Matter of fact, oftentimes you want to see a descending channel like this before you get the continuation to the upside. But when you see this price pattern in relation to what we're seeing out of the other indices, it is bearish, right? Or at least as far as the IWM is concerned. So just to give you a better idea, again, what are we seeing out of the S&P 500? We're seeing an ascending channel, right? What are we seeing out of the NASDAQ? Not even an ascending channel, just climbing higher, right? What do we see out of the Dow Jones, which has been relatively speaking weaker? A horizontal channel. What do we see out of IWM? The weakest? A descending channel, right? So clearly they are the weakest of the four, and probably the area you don't want to really fish around for long plays right now until we see a change in character. I know it makes a lot of times it's appealing for people to say, well, it should catch up, but it hasn't really caught up. Other than a few sporadic moments throughout the last several years, it has mostly lagged behind. And it's unless you're really good at timing those areas, or you can maybe see a particular sector or industry within the small caps that are starting to behave better, it's probably better to stick to the tech names right now and just take advantage of their bullishness. But what we want to see now is a move back above the 200 and above this descending channel. And then from there, I think that it could start to climb higher, maybe test 162 while the other indices test their all-time highs. If we do pull back across the board, well, then IWM is going to be the one that's a little bit scary because it will likely continue to go lower and lose its 20 and its 50 and then retest this area around 150. And if it loses that level, then I think that's the first warning signal that the market has maybe finally found some sellers and has reached the point where we can expect more horizontal price action and maybe start to backfill some of the areas that we've shot through all year. Just to go back to the S&P 500 in closing, as far as what I want to see out of the markets or what I'm seeing out of the markets, if we take a look at a longer-term chart, right, we've been trading sideways for a year now, a little over a year, and even though we've had strong moments of selling and strong moments of buying, overall we haven't gone anywhere since basically the beginning of 2018. The beginning of 2018. Or end of 2017, however you want to look at it. We had a strong rally, then a strong sell-off, strong rally, strong sell-off, strong rally, right? So following that pattern, we're probably going to see a strong sell-off sometime in the next few months. I don't think we're ready to anticipate that. I don't think you want to short yet just because that's been the pattern. Remember, this is this chart is in terms of weeks, and that we could be weeks off from the strong selling. But chances are that what's going to happen is we're going to come up to the top of that, and then we're going to have to backfill and retest a lot of these areas that we just sliced right through. As I mentioned earlier, we haven't really paused at any of these critical points of resistance or support, depending on how you want to look at it. And we might need to come back and backtest and retest those areas at some point, and that might be the next step that happens. But if that happens, we'll see it first on IWM, and then we'll see it on the Dow Jones, and then eventually we'll see it on the S&P 500 and the NASDAQ. And we'll get the warning signs, and we'll get more signals telling us that it's time to start looking at different types of trades. But for now, until this bullish momentum totally dissipates, we need to continue taking advantage of it. And that's kind of where we stand across the board in the markets. We're in a bullish environment. I think if you missed the buy from the last 4 days, then you need to kind of wait for the next setup, which may or may not be our last attempt at a long play before we start to really grind into resistance and then see what happens as we test our all-time highs. And then from there, we'll have to reevaluate and see how we want to go ahead and spend the next month or two as we head further into spring. All right, so that's the four major markets. Hope that gives you more clarity as to what's happening across the board. I'm going to look at the U.S. dollar now, and we're going to see how it's affecting gold and silver and see what oil's doing. Then we'll move on to the chart requests. If you guys have chart requests, I'd love to see what you guys are looking at. See if there's anything that we find. Maybe you guys are looking at something that is mimicking this, or maybe you find something that's a little bit different, or you're trying to figure out whether to stop out or take profits on a name. Anything like that, go ahead and put it in there, and I'll take a look at it and see if we can devote some time to looking at whatever charts you guys are looking at. Before we do that, let's take a look at the UUP index and the U.S. dollar. The U.S. dollar has been strong again. It continues to sort of ride this channel upwards. I think we're getting towards a critical point where we're going to see a big shift in the dollar versus the euro. And it might be bullish for the dollar, but we'll get into that in a second. Overall, we're still climbing higher. Now, typically in a pattern like this, I would expect the U.S. dollar to stabilize here and to stall out, right? We've kind of come right back up to highs around the $26 range on the UUP index. And what often happens here is we come back and test the bottom of this channel and consolidate. However, we're reaching a point now with the euro versus the U.S. dollar that is very, very critical. This looks like the euro's last gasp attempt to hold this level. Again, if we look at the weekly, and we see what's happening here, we're at a very critical level around 113, and we've slowly been losing it. Now, this is really probably the last chance for the euro to break past it and to start pushing above it, right? And so I think that we're going to have pretty strong ramifications for the U.S. dollar in the next couple of weeks. That's going to probably have an impact even on the markets in general, right? So if you take a look at what's happening here, we have slowly eroded in price action and kind of lost ground across this 113. Now, the one positive I could say for the euro is that it's sort of the opposite of what we were seeing in the S&P 500, where the trajectory has sort of slowed down, right? We started off a little bit steeper of a sell-off, and then it sort of stabilized, and then it sold off a bit more. Now it's stabilized even longer. And we're sort of reaching a point where we maybe are halfway through some sort of a rounded bottom and kind of come right back up across the other side. But that being said, if we look at it on the daily, what we're seeing is a story of continually eroding price action. I didn't mean to do that. Where we had this triangle, we broke out above it, came back, had a false breakdown, but came back above it, and then we had another false breakout and came back and really broke down, right? And now we're trading on the wrong side of this momentum, and we did try to break past it and failed and are coming back again. I think if we come up to this trend line again and fail, there's a very good chance that we ultimately lose 112 and head much lower on the euro-US dollar cross. So I think this is a pretty important chart to watch right now to see what happens. Now, if we can break above this descending trend line and get back above 113, then that could be a major reversal that puts a big hit on the U.S. dollar, and we finally get a pullback on the U.S. dollar. But if we fail here again and start to roll over, I think that there's a good chance that the euro finally caves in and loses this level and heads even further lower. So this is actually an area that I'm looking at very closely to see what happens next, because I think that this could be a good trade for any of you Forex guys. And I know there's not a lot of you in here, but what happens a lot of times when I see the market in a situation where I don't like the risk reward and I don't see anything going on with it, a lot of times other places like Forex or cryptocurrencies give me opportunities to trade again. And this is an area where I could be looking for potential big move coming soon. Now, if we look at the U.S. versus the Canadian, we'll see that the U.S. dollar is holding up pretty steadily. Give me 1 second. If we look at the U.S. dollar versus the Canadian, it's doing a very good job of sort of retesting this newfound support zone, which was the neckline of that inverse head and shoulders, right? Now, twice now we've come up and failed to get above 134, but we found some good support here at 133. And it'll be critical to see if we can find support here again. If we do, then I think that it only continues this pattern, which eventually would resolve in a bullish move for the US dollar as well. So very similar to the euro in that we're at a spot here where it could turn bullish pretty quickly, but it could turn bearish as well, right? And it's the same thing with the US dollar versus the euro. If the euro can break above some of those key areas, then we'll likely see it move higher with the US dollar moving lower versus the Canadian, and we'd lose this 133 and it would lead to a move lower. But for right now, until I see us lose this 133, I think this is a bullish chart and looks like it's setting up for a next consolidation range before we get a major breakout again to 136. And so if I see the euro cave in and start to roll over, I would expect the US Canadian to also move higher and provide a nice trade back to 135 and possibly all the way back up to 136. And then finally we have the US versus the yen. Which is a bit of a different picture, right? This one actually looks like a short. And I mentioned this last week, this classic pattern where you have an ascending channel and you have a breakdown. And we're on the retest of that retest of that breakdown right now. And so this is the first chart that tells us maybe the US dollar is tired and wants to pull back, right? And again, if you look at the AAPL index, we're at resistance and there is a chance that we pull back. In which case we'd see strength on the euro and maybe we'd lose a little bit on that US Canadian chart. Well, then this would be the one where you'd look for a failure off of this level. Now, it actually tried to break above the 200 and break above this, so it actually is showing a little bit of bullishness in trying to negate this pattern. And we'll see what happens here, whether it eventually finds resistance and rolls right back over, or if it breaks above this area here, right?
You were saying?
If it can break above there, then it'll start to make its way back up to the 111 to 112 area. All right, so that's the US dollar. Overall, it's been pretty strong. And you can see the impact on gold, right? Gold has been struggling. Now, gold is still at support. I'm not really excited about the pattern, but it is at support here. And if we get a nice clean move off of this, we can maybe take a look at a trade back to the long side. I would only take a trade on gold right now if we saw the US dollar lose strength versus the euro. At which point then maybe I'd go ahead and take a shot here on gold or some gold miner names, looking for a move towards the top of that range. I think it's the same scenario on SLV. I think I'd be more interested in GLD than SLV. But it's the same idea. We're at support and kind of holding up but struggling. And if we see weakness in the US dollar, then these guys will get a little bit of relief to be able to move higher and start to make their way upwards towards the top of this range. And you can see they're both in pretty broad ranges right now and very sloppy ranges. A lot of back and forth, but a lot of ugly moves and a lot of difficult trend lines to really analyze. But overall, if we can find support here, it could be worth taking a shot to the long side. So this is another area we could watch that has a little bit different risk reward and a little bit different area of value compared to what we're seeing in the overall markets right now. And then finally, we have oil. And oil has been strong. It actually accelerated its recent trend. You can see it moving above the 200 and kind of getting above this channel. Typically, when you accelerate a move like this, it doesn't last too long. But overall, oil is moving higher. And as those of you that maybe follow me on Patreon know, I put a couple of oil names as potential trades on Monday, and they haven't totally resolved yet. One of them actually ended up being a stop out, but the other one is still setting up. But I think oil is still a good place to look at, and still a spot that we can maybe take advantage of some bullish momentum that isn't 100% correlated to the overall markets. And that kind of covers it for oil, gold, the US dollar, commodities, and that sort of stuff. Let's go on to the chart request. Lana, you have one. Anyone else? Again, we don't have a lot of people in here today, but those of you that are in here, feel free to put in anything you want to look at. We have 15 minutes, and we could dedicate a good amount of time to them. Lana, what are you looking at for Netflix? Are you just checking this? Are you still long this? Are you looking for a new long? Unlike a lot of the tech names, Netflix actually has been a little sluggish here. I'd say overall, I don't even know where to put this top trend line. It's basically dealing with this specter of $400. You're still long, and I would continue to ride this to the long side until earnings, most likely. Let's take a look. When do we have our next earnings? April 16th, right? So just a couple of weeks. So we're already heading into earnings season, so that might be what puts the next move on a lot of the markets. So I would hold this. I mean, unless it broke below the 20, the 50, and we lost this sort of this ascending triangle. I don't even know if I want to put the top of this trend line here anymore, because it's sort of doing this, right? I don't even think it's a horizontal level. It's kind of like a rising wedge at this point. It's struggling with this 384 to 390, right? And I don't think it breaks it unless it's earnings related. But I also don't think it falls down. So what I would do in your shoes, I don't know if you have enough shares. Obviously, Netflix is it's a $300 stock. So I don't know if you're holding a few hundred shares of this or not. But if you were, it might be a good idea to sell covered calls using next week's calls and get a little bit of extra out of this trade right before until earnings. I wouldn't obviously sell the earnings ones because they're going to have trouble depreciating because of the increase. Okay, so if you have a few hundred, then I think a good idea might be to sell some covered calls just above, just at the 385, 390, just below 400. I doubt seriously that this thing breaks 400 before earnings, and it might give you a little bit of extra like profit before you have to close out. I wouldn't hold this through earnings, at least not a few hundred shares, because again, this thing can move 20-30% in either direction, and it's pretty random. It's not that predictable which way. Even when it does well, it sometimes pulls back, right? So I would basically hold on. I don't think it's done anything to let go of it, but you can see it slowing down, right? And you can see that it's kind of struggling. And I think the reason for that is because people are looking at it like this is 400 is really expensive. And I know we're not at 400, we're at 370. But the idea is that people are thinking it's already reaching close to 400 and it doesn't have a lot of room beyond that. So I think that this 385 area is probably a good place to sell some calls and just wait for it to sort of stall out. And if it does pull back, if it does break below the 20 and the 50, well then you just close out your covered calls along with your shares, and you would have gotten a little bit of extra protection as it drops these 10 points or so. I don't have Thinkorswim open, so I can't see how much you can get out of those calls, but I'm sure you can get a few points out of them, and that would probably work out pretty well for you from here to next week as you wait to see what happens into earnings. But that's pretty much all I would do. I think at this point, Netflix has done this quite a bit in the past, where it sort of trades in a holding pattern prior to earnings, and it waits to see what earnings is going to happen, what earnings is going to do, because it moves quite a bit during earnings. You can see it averages about 12%. I didn't log in yet, but it has the potential to move all the way up to 20%, right? And we'll see what happens with it this time around, but overall, we'll see. I don't expect it to lose this wedge from here to earnings, and if it does, you would be in a good spot if you sold the calls. Because even if it broke above 385, you're still planning on closing that out before earnings, and you would just get to add extra to it. So I think it's a no-brainer decision to probably sell calls on it. I would even sell them today because we've already been up 3 or 4 days in a row, and just kind of wait from there. Just wait till the end of next week, and then you can make a decision prior to earnings. And if you want, Lana, once we get to earnings, you can DM me if you want on the Discord and see if there's another strategy you can have in place to protect it. Although I think probably the best thing is to step aside. But there are strategies we could come up with. We could even maybe do it next Wednesday or the Wednesday after, where you replace this with options. So there are different strategies we could do to go ahead and take advantage of protection in this situation. But I think from here to earnings, the best case scenario is probably just put on some covered calls and take advantage of that premium for the next week while it waits for earnings. No problem. You'll notice compared to Amazon, it's sort of slowing down a bit. I think Google was another tech name that was mimicking the NASDAQ a little bit more. And even Facebook was getting a bullish move, right? So Netflix is lagging a little bit. As you can see, it's kind of stalling while the others are kind of moving higher. Now, that could indicate that there is a move coming, but I don't think that's the case. But I think even if we did get a move, I think the covered calls would still play perfectly with what you wanted out of it. So I think that's still the best. I think that's still a good opportunity and a good way to go ahead and take advantage of being long on those. All right, we have time for another one if anyone else has something to ask. Remember, it doesn't have to be a chart that you own or a chart you want to get. It could be even just a chart that you have a question on as far as a pattern. You're not sure what it's doing or how it behaves. Also do want to point out, for those of you that maybe haven't paid attention to this in a while, we finally got some momentum out of Bitcoin. A very strong move, ramped up 1,000. And just your friendly reminder, I know cryptocurrencies have not been in vogue over the last year or so, but you should keep an eye on this because you get more momentum out of these things or more volatility than most stocks, right? To get a move from 4,000 to 5,000 in 2 days is pretty impressive. And there is always volatility like this. So for those of you that maybe keep poo-pooing this and say, nah, cryptocurrencies are dead. There's no point to them. They were at 20,000. They went all the way down to 4,000. They're a useless instrument. You might be right, but that doesn't mean you can't trade them. I think overall there's still a lot of volatility and there's still a lot of explosive potential in a lot of these cryptocurrency names. And so I know I haven't mentioned them in a long time because it seems like none of my followers have any interest in it, but I still follow them and I still have traded them back and forth every now and then. And I did want to point out that there is still a lot of bullish opportunities here for anyone that wants to trade. And I want to point out one other thing, I guess as closing thoughts, because it looks like no one else has any chart requests for today, is if you trade from the perspective of technical analysis, then the instrument doesn't really matter, right? Because what we're trading here, this chart's not really a chart of Bitcoin. It's a chart of what people think about Bitcoin and what people's opinions on price of Bitcoin is, right? That's the same as this chart of Netflix, right? It's a chart of what people expect Netflix to be priced at and what their expectations are, which is the same as this price on the euro US dollar, right? It's a reflection not just of what the euro versus the US dollar is from an economical perspective, but what people think the value of the euro is versus the US dollar, right? So as long as you have a good understanding of technical analysis and a good background and have the ability to dissect the chart, you could trade any of these instruments, right? So if we're in a spot where I'm not comfortable with the S&P 500 from a risk-reward perspective, well, then that's cool. I have Bitcoin that I could look at, or I have the euro, US dollar, Forex cross I could look at. there's all these different instruments that you can trade that give you the same opportunities that a stock does, right? And it's just a matter of you sort of broadening your horizons and looking at other ways of taking advantage of human psychology, which is really all we're doing when we're trading based off of technical analysis. Is we're just taking advantage of mob mentality, basically. So keep that in mind whenever you look at something. You're trying to figure out. So cryptocurrencies, so Bitcoin for one, which I know has been viewed in a pretty negative light over the last couple of years. It doesn't mean you should completely ignore it, because there are every now and then incredible trading opportunities with the cryptocurrencies, just like there are incredible trading opportunities with Forex, just like there are with stock markets, just like there are with marijuana stocks or with gold or with silver. There's going to always be somewhere where we could trade, and it's just a matter of us understanding the price action and trying to get a good read of which one gives us the best chance of getting a high probability trade. Okay, so hopefully that's a good way to close it and give you guys a friendly reminder to keep your eye out for all different types of trading vehicles, because you never know which is going to be the one that gives you that good winning trade that you are looking for at any particular time. Okay. Other than that, hope you guys have a good rest of this week, and we will meet again next Wednesday. Thank you, Lana. Thank you for participating, and thank you the rest of you guys for joining. I appreciate your attendance.